What if the main reason that a billion people are trapped in poverty today has absolutely nothing to do with a lack of money?
Which is a pretty wild thing to consider.
Right, like no lack of resources, no lack of education. What if the real culprit, this invisible chain holding back the entire global south, is literally just missing paperwork?
Just bad filing, basically.
Exactly. So today we are looking at a blueprint that claims fixing a few smudged land deeds and connecting them to a digital network could unlock more wealth than a century of foreign aid.
It sounds almost too simple when you phrase it like that, but the mechanics are fascinating.
They really are. And we're pulling this from a deeply analytical article published on the Democracy for Nepal blog. The date on this piece is exactly today, June 5, 2026.
Hot off the presses.
Yep. And the title really sets a massive stage. It's called Unlocking Prosperity: How India's Digital Triad of Aadhaar, UPI, and Land Reform Can Create Wealth Across the Global South.
Yeah, so the author is laying out a really specific architectural blueprint here. It's all about how a nation fundamentally upgrades its economic operating system.
It's operating system. I like that.
Right, because it completely challenges that intuitive assumption we all make, that poverty is just like an empty room waiting for someone to deliver furniture.
Just waiting for cash drops or resources.
Exactly.
Yeah.
But the argument here is that the room is actually packed full of highly valuable assets, but the lights are off.
Oh, wow.
Yeah, and because it's pitch black, nobody has the legal authority to actually sell, trade, or leverage anything inside it.
That is such a powerful image. And our mission for this deep dive is to guide you, the listener, through the mechanics of that dark room. And more importantly, how you actually turn those lights on.
Because that's the tricky part.
Totally. We're going to dissect how the author believes three very specific digital tools, combined with a total restructuring of land ownership, could theoretically digitize 90% of an entire economy.
Which is a staggering number.
It really is. We are talking about turning what they call dead capital into vibrant, measurable wealth. But okay, let's unpack this. Before we get into all the high-tech digital solutions, we really have to understand the analog disaster we're starting from.
Yeah, and I should probably establish a quick boundary for our analysis before we even examine that analog baseline.
Good idea.
Because the source material heavily features the concept of land reform. And, historically and globally, land reform is an incredibly charged topic.
Oh, absolutely. It carries a ton of baggage.
Right, with intense political, social, and ideological interpretations. So my role today is strictly to impartially break down the author's arguments and frameworks.
Just looking at the mechanics of it.
Exactly. We are here to synthesize how the proposed system works, exploring how the author claims these levers and pulleys work together, without endorsing any specific political ideology or, taking sides on the historical baggage of property redistribution.
Which is super important because we are talking about the actual earth beneath people's feet. So let's look at how the author frames the root of the issue here.
Right, the invisible asset.
Yes. The article argues that in India, and by extension across the whole developing world, persistent poverty is actually rooted in the absence of clear, digitized land records.
It's a massive failure of formal property rights.
And it creates this crazy situation. It's like, okay, imagine you have a winning $1 million lottery ticket, but the barcode is hopelessly smudged and no one will honor it.
You're technically rich, but functionally poor.
Exactly. But why? Why is a physical piece of land utterly useless in a modern economy if the invisible legal framework around it is broken? Like, you can still stand on the dirt, right?
You can stand on it, sure, but the invisible legal framework is actually the only language a modern financial system understands.
Okay, so without it, the banks are just deaf to you.
Exactly. To really grasp the depth of this crisis, we have to look at the mechanics of ambiguity. When land ownership is ambiguous, it generates this state of complete psychological and economic paralysis.
What does that look like on the ground, though?
Well, let's look at the physical reality in many of these regions. You have a piece of land that has been in a family for, say, generations. Over 100 years, it's been verbally subdivided among siblings, cousins, and distant relatives.
Right, just a handshake agreement like your uncle gets the north corner, you get by the river.
Exactly. There might be a paper deed somewhere in a local municipal office, but perhaps half of it was eaten by silverfish in the 1980s.
Oh my gosh.
Or the ink faded. Or it simply doesn't reflect the current reality of who is planting crops on which corner of the field today.
So you have a situation where a farmer is working a plot of land, But if you ask the local government who owns it, they just shrug.
And if you ask the 5 neighbors, they all point fingers at each other.
What a nightmare.
And the text highlights how this ambiguity actively destroys potential value. Consider the mechanism of investment.
Okay, how so?
Well, if you were that farmer, are you going to spend your life savings to dig a deep irrigation well? Are you going to buy expensive, high-yield seeds that require years of soil cultivation to actually pay off?
I mean, probably not.
You definitely won't. Because tomorrow, a cousin from 3 villages over could just show up with a conflicting... The bank's risk assessment department looks at the legal framework, verifies that the state guarantees your ownership, and issues you a loan against that value.
And then you use that loan to buy a tractor, which doubles your yield, paying off the loan and leaving you wealthier. That's how it's supposed to work.
But if the paperwork is missing or disputed...
The bank cannot underwrite the risk?
Exactly. A bank cannot repossess a disputed asset if you default. If the ownership is a tangled web of verbal agreements and degraded paper, the bank simply refuses to interact with it.
So the land might theoretically be worth millions in a vacuum, but functionally it cannot generate a single dollar of credit.
The capital is totally locked.
Yeah.
And the author makes a fundamental distinction here, which is key. Solving this kind of systemic poverty isn't about injecting outside money.
It's not about handing out checks.
No, it's about building a verifiable system of ownership, so the prosperity already sitting in the soil can be unlocked and utilized by the people standing on it.
Wow. Which brings us to the author's mathematical example, and this is where the theory hits the ground in a way that feels almost counterintuitive to me.
The 50 to 20 acre paradox.
Yes. The source asks us to imagine a rural family holding 50 acres of land. But this land is under the exact kind of ambiguous, fragmented, disputed title we just talked about.
It's messy.
Very messy. And the author states that through targeted land reform and a new digital titling system, this holding is legally streamlined and reduced to 20 clearly titled acres.
And that transition from 50 disputed acres to 20 formalized acres is really the cornerstone of how the author measures the value of secure property rights.
Wait, time out. I'm putting myself in the listener's shoes here. Here's where it gets really interesting, but also confusing. If I have 50 acres of land and the government or some new system comes in and says, hey, now you only have 20, I'm going to feel completely robbed.
I mean, viewed purely through physical dimensions, it absolutely appears to be a loss.
Yeah. How on earth is losing 60% of your physical territory a good deal for the farmer? That sounds like a massive punishment.
It does. But the author asks us to evaluate the asset through the lens of economic utility over a 5-year timeline. We have to break down the mechanics of the arbitration the text proposes.
Okay, walk me through it.
The process of reducing 50 ambiguous acres to 20 clear acres involves a systematic clearing of the legal fog. It means paying off conflicting claims, establishing undisputed digital boundaries, and securing an unassailable legal title backed by the state.
So you are basically trading physical space for absolute legal certainty.
Precisely. And the text argues that within 5 years, those 20 clear acres undergo an economic metamorphosis that makes them vastly more valuable than the 50 original acres ever were.
Really? How does that actually happen?
Well, let's look at the cascading benefits. First, the threat of litigation and physical violence just evaporates.
Which is a huge drain on time and money.
Huge. In systems with poor land records, enormous amounts of capital and human energy are wasted just fighting over property lines. Once the boundaries are cryptographically secured and digitally mapped, that drain stops.
The farmer isn't spending half his time patrolling his borders with a stick or sitting in a local court for 10 years.
Exactly. Second, the asset becomes bankable. As we discussed, a bank will not touch 50 acres of disputed land.
Right.
But 20 acres with a flawless government-backed digital title, that is a pristine financial instrument. The family can now secure a mortgage at formal, regulated interest rates, rather than relying on predatory local moneylenders who charge exorbitant fees.
And then they use that new capital to mechanize their farming.
Exactly. Productivity per acre skyrockets.
Okay, I see the mechanism now. The 50 acres were like this giant rusting machine that no one had the manual for, so it just sat there taking up space.
That's a great analogy.
And the 20 acres are a smaller, hyper-efficient engine that is plugged directly into the national power grid. Because the ownership is verified, buyers and sellers can trust the transaction, meaning the land can actually be sold at its true market value if needed.
And the author emphasizes that this is an entirely organic transformation of the asset. The value multiplier comes from the sudden ability to interact with the broader economy.
It's not a magic trick.
No, the 20 acres generate more crop yield due to investment, they provide access to credit, and they carry a higher market valuation simply because the risk of ownership has been reduced to zero.
But okay, if establishing clear title is so economically magical, why hasn't every developing nation already done it?
It's a logistical nightmare.
Right. What is the physical roadblock to arbitrating a billion people's land? Because you can't just have an army of bureaucrats with clipboards walking across the subcontinent measuring dirt.
You really can't.
It would take a century and be corrupted instantly. Someone would just bribe the guy with the clipboard.
And that physical limitation is exactly why the author introduces the concept of the digital triad. The analog bureaucracy simply cannot scale to meet the demand of a billion people without buckling under its own weight.
Or succumbing to massive corruption, like you said.
Right. So the solution proposed is an architecture built on digital public infrastructure.
And the text points out that India has already built the first two foundational pillars of this architecture. Let's break these down, because the author uses some terms that probably need a bit of unpacking.
Sure.
Pillar 1 is Aadhaar, which is described as the world's largest biometric digital identity system. And Pillar 2 is UPI, the Unified Payments Interface, which the text calls a real-time, low-cost payment rail.
Two massive achievements.
But wait, you keep seeing the phrase payment rail in fintech discussions. For anyone listening who isn't a software developer, what does a rail actually mean in this context? Are we just talking about an app on your phone?
No, a payment rail is not an app. It is the foundational infrastructure that the apps run on. Consider the traditional banking system. If you want to move money from Bank A to Bank B, the process is highly fragmented. Bank A sends a message to a centralized clearinghouse.
Right.
The clearinghouse takes time to verify the funds, manually or batch processes the request, and then sends a message to Bank B. It takes days, it requires human oversight, and every single step extracts a fee.
It's like sending a physical letter through 3 different post offices.
Exactly. A payment rail like UPI replaces that entirely. It is a set of standardized, open protocols and agreed-upon digital language that every bank, every app, and every user connects to simultaneously.
So it's an instant ledger update.
Yes. When you send money over UPI, the system doesn't physically move cash. It instantaneously updates the cryptographic ledgers of both bank accounts in real time. It reduces the friction of the transaction to a fraction of a second and the cost to a fraction of a cent.
Oh, wow. And Aadhaar, the first pillar, provides the biometric verification for the person initiating that instant transfer. It basically ensures the person pressing send is mathematically verified to be the actual owner of the account.
Exactly. You are your password. The author views Aadhaar and UPI as the first two components of a fully interoperable system. But the triad is incomplete right now.
Right, because you have the verified identity and you have the frictionless movement of capital. But the land is still stuck in the analog world.
Precisely. What the Global South desperately needs, according to the text, is the third pillar, which they call a comprehensive land Aadhaar.
A land Aadhaar. So applying that exact same digital logic to the dirt itself.
The author defines this as a digitized, tamper-proof system of land records that is permanently cryptographically linked to an individual's biometric identity.
So it takes the analog paper-based system of deeds, which can be forged or lost or bribed away, and just replaces it with an immutable digital ledger.
Yes, it becomes unbreakable.
Okay, let's pause and visualize how these 3 separate tools actually interact to create this virtuous cycle the author talks about. Because the text keeps using the word interoperability, and honestly, that word can sound like corporate jargon.
It can, yeah.
How does an API, an application programming interface, actually connect a fingerprint, a piece of land, and a bank transfer? Like, practically speaking.
Let's walk through the mechanics of a transaction using the analogy of standardizing global shipping.
Oh, I like this.
Before the 1950s, loading a cargo ship took weeks. Every piece of cargo was in a different sized box, barrel, or crate. It required immense human labor to puzzle piece it all together, and goods were constantly lost or stolen.
It was chaos.
Complete chaos. Then the world agreed on the standard shipping container. Suddenly, a crane could lift a container off a ship in Shanghai, place it directly onto a train in Los Angeles, and transfer it to a truck in Chicago.
All without a human being ever opening the box, because the dimensions were standardized.
Exactly. So Aadhaar, UPI, and land Aadhaar are essentially the standardized dimensions for the entire economy. The interoperability means these 3 massive databases speak the exact same digital language.
So what does that sequence look like for a normal person?
Let's trace the sequence the author describes. Say a farmer wants to sell an acre of land. Step 1 is identity. The buyer and seller biometrically authenticate themselves using Aadhaar. The system mathematically guarantees they are who they say they are.
Okay, identity is locked.
Step 2 is the asset. The land Aadhaar system instantly verifies that the seller actually holds the unencumbered digital title to that specific geographic coordinate. There is no manual title search required. The ledger is absolute.
No lawyers arguing over faded ink.
None. Step 3 is the transaction. The buyer transfers the funds instantly using the UPI rail.
And because they are interoperable, the moment the UPI rail confirms the funds have hit the seller's account, the Land Aadhaar API automatically updates the ownership record to the buyer.
Instantly. The human element. The clerk who takes 3 months to process the paperwork. The middleman who charges a fee to expedite the file. The lawyer hired to verify the analog deed is entirely removed from the sequence.
It's just gone.
The transaction happens peer-to-peer, instantly, securely, and permanently. The friction of formalizing wealth drops to near zero.
Which brings us to what I think is the most staggering claim in the entire text.
The 90% shift.
Yes. If you suddenly attach an unforgeable digital tracker to every single acre of land and process every transaction on an instant verifiable digital rail, you are going to trigger a shockwave through the economy. The author posits that implementing this triad shifts a massive majority of economic activity into the digital realm.
Potentially 90% or more of all monetary flows.
Right, and a 90% formalization of a predominantly cash-based informal economy that is a structural upheaval of unprecedented scale. It's like turning the lights on in a dark, incredibly messy room.
It illuminates everything at once.
But I have to play devil's advocate and stop right there because 90% digital sounds terrifying to some people. If I am a citizen who has operated in cash my entire life, this sounds less like an economic upgrade and more like an absolute surveillance nightmare.
I totally get that reaction.
Right. How is forcing an entire nation onto an uncompromising digital grid not just a massive, oppressive friction for everyday people? If the goal is to help the poor, why mandate a system that tracks every single penny they move?
Well, what's fascinating here is how the author addresses this perceived friction by exploring the mechanics of systemic corruption.
Okay, how so?
The argument is that the informal economy is not just a quaint space where local farmers trade vegetables. It is actually the primary cloaking mechanism for massive institutional theft.
Oh.
The text argues that when 90% of the economy moves onto interoperable digital rails, hiding corruption becomes mathematically nearly impossible. The friction you are describing is actually the architecture working as designed to starve bad actors.
So the system is deliberately designed to create insurmountable friction for illicit activity while smoothing the path for legitimate wealth creation.
Exactly.
Let's dig into the specific mechanics of how code actually stops a bribe. Because the author says petty bribery will lose its cover. But how does a digital rail physically stop a local bureaucrat from demanding cash?
By entirely removing the bureaucrat's desk from the process.
I love that.
In an analog system, power is derived from the ability to delay. If a citizen needs a land transfer approved, a clerk physically holds the paper file. The clerk can simply leave the file at the bottom of the stack until the citizen pays a cash bribe to move it to the top.
The analog process requires human routing, and human routing allows for toll booths.
Exactly. In the interoperable digital triad the author proposes, the routing is entirely algorithmic. When the Aadhaar biometric matches the land Aadhaar title and the UPI payment clears, the code just executes the transfer.
There is no clerk empowered to pause the transaction.
Right. The digital rail eliminates the physical choke point where the bribe is typically extracted.
Wow. And the author also points to the eradication of ghost beneficiaries, which is another huge issue.
The mechanism behind ghost beneficiaries is fascinating and tragic. In many developing nations, the government allocates massive funds for things like agricultural subsidies, fertilizer discounts, or poverty relief.
The money is there on paper.
Right. But in a disconnected system, corrupt officials just create thousands of fake names on paper ledgers and funnel those subsidies straight into their own pockets. The money simply vanishes into the informal cash economy.
But if you require the triad...
If the subsidy delivery is routed through the triad, the system requires a biometric authentication, a literal physical fingerprint or iris scan linked to an Aadhaar number, which is linked to a UPI account.
And you can't fake an iris scan.
Exactly. It is technologically prohibitive to fake 10,000 unique biometrics. The money cannot be released to a person who does not physically exist in the digital ledger.
It just blocks it completely. And the third area the author says loses its cover is opaque land deals.
Which ties right back to the shadow economy. Real estate is historically the easiest way to launder illicit cash or hoard untaxed wealth. You buy vast tracts of land using shell companies or proxy names.
Just burying your money in the dirt, essentially.
But if the land Aadhaar system makes every square inch of the nation digitally transparent and linked to a verified human identity, you cannot secretly own 1,000 acres while claiming poverty, nor can you sell the same plot to 3 different people.
So the structural defense mechanism is the transparency itself. The fog of ambiguity isn't just inefficient, it's a deliberate smokescreen used by predators to extract wealth from the vulnerable.
Exactly.
And when you digitize 90% of the flows, the smokescreen dissipates. The resources meant for the farmer actually reach the farmer.
The market finally clears efficiently.
Yeah.
The ultimate result the author envisions is a state where public resources reach their targets without leakage, and the poorest citizens finally have a verifiable defended asset they can use to participate in the formal economy.
It's a complete paradigm shift. Now, if we look at how listeners might process this, especially regarding the term land reform, we really have to examine how the author completely redefines that concept.
Yes, because historically, land reform has a very specific, often violent, political definition.
Right. The source acknowledges this traditional lens, which views land reform primarily as an exercise in subtraction and redistribution. The historical model involves the state seizing land from large stakeholders and simply dividing it among the landless.
It operates on the premise that wealth is a static pie, and the only way to help one group is to shrink the slice of another.
It's the Robin Hood model. You take from the rich to give to the poor, like forcing someone to share their small pizza.
But the author argues that this static pie mentality entirely misses the economic potential of formalized property. Secure property rights don't divide the pie, they multiply the absolute value of the pie for everyone involved.
Instead of slicing it up, you build a commercial oven that lets everyone bake their own giant pizzas.
That's the multiplier effect generated by verifiable ownership.
But I do question whether this truly benefits the lowest class or just, middle-class landowners who already have a foot in the door.
Well, let's look at the specific long-term behaviors this system suddenly incentivizes at the foundational level of the agricultural worker. When a farmer transitions from holding a disputed claim to holding an unassailable digital title, their time horizon fundamentally shifts.
Their time horizon, meaning how far into the future they're willing to plan and actually spend money.
Exactly. An ambiguous title forces a daily survival mindset. You only care about the next harvest. But a permanent digital title allows for generational planning.
Oh, that makes total sense.
The text explicitly mentions the sudden incentive for soil health investments. A farmer will spend capital to restore depleted nutrients if they know their grandchildren will harvest the results.
They will invest in permanent irrigation infrastructure.
They will pivot to crop diversification, planting higher yield, higher risk crops, because they finally have the financial buffer of a formal asset to secure them against a bad season.
So the land goes from being just a place you extract calories from to an engine you actively maintain and upgrade.
Precisely.
But there is a point the author makes here that completely reframes the goal of agricultural policy for me. The text argues that secure, marketable property rights give farmers the freedom to exit agriculture entirely.
Yes, the freedom of exit is perhaps the most profound mechanism discussed in the source regarding social mobility.
Let's really break that down, because it goes against this romanticized idea we often have of keeping everyone happily farming on their ancestral plots. Why is leaving the farm the ultimate goal?
Consider the trap of the informal system. If you have an ambiguous, legally vulnerable title to a piece of land, your physical presence is literally your only defense.
You have to be there.
You have to literally sit on the land to ensure a neighbor doesn't encroach on your borders. You cannot leave to take a higher-paying manufacturing job in a rapidly growing city. You cannot move to a different province to attend a university.
Because the moment you abandon the physical space, someone else will claim the informal rights to it. You are a prisoner to the ambiguity of your own asset.
You are chained to the dirt because you don't have a piece of paper that proves it's yours when you look away.
That is awful.
But observe the mechanics when the land Aadhaar is implemented. Your ownership is cryptographically secured on a national ledger. Your physical location is suddenly irrelevant to your ownership status.
You could be 1,000 miles away, and the system still says you own it.
Exactly. The text explains that this farmer now has options. They can cleanly lease their 20 acres to a highly mechanized, efficient farming cooperative, generating a reliable stream of passive income.
While they go do something else.
Or they can sell the land outright on a transparent market and use that capital, the true value of the asset, to start a technology business in an urban center.
The pie isn't just getting bigger. The ingredients are finally allowed to move to where they are most productive.
The author describes a process where millions of formalized, smaller plots individually appreciate in value, become collateral for new businesses, and organically amalgamate into massive national wealth creation. The capital locked in the soil is liquidated, allowing human capital to flow freely.
This systemic fluidity vastly reduces the litigation, stagnation, and rural poverty that historically plague nations with ambiguous land systems.
It changes the entire trajectory of a family tree. It's not just about growing more wheat, it's about giving a family the option to stop growing wheat entirely and still retain the generational wealth of their land.
That is just incredible. So, having explored this really profound internal transformation, the narrative of the text suddenly zooms out. We move from the granular mechanics of a single digital title to the global geopolitical stage.
Right, the macro view.
The author attempts to answer why India's specific development of this triad matters to the rest of the world.
The author broadens the scope to encompass the entire global South, noting a critical pattern. Nations across Latin America, Africa, and parts of Asia suffer from the exact same institutional deficits that plagued India's analog era.
Fragmented land holdings, economies choked by cash, rampant bureaucratic leakage.
And massive populations entirely excluded from formal credit markets.
So the diagnosis is universal across the developing world. The citizens are suffering not because they lack potential or raw intelligence or work ethic, but because they lack the institutional technology to prove their worth to a broader market.
That's exactly it.
And the text argues that India has a historic opportunity in the 21st century to export its solution, this exact stack of digital infrastructure.
The author frames this as a monumental pivot in India's global economic role. For decades, India's technological identity has been really closely tied to providing back-end IT support and labor for Western corporations.
The world's back office, writing the code that makes someone else's company run smoothly.
Right. But the text argues that by fully developing the digital triad, India has created its own flagship proprietary operating system for national economies, and is now uniquely positioned to export it.
But let's look at the motivation here. I compared it earlier to a tech company pivoting, but is the author suggesting that India, having spent billions developing this incredibly complex, nation-scale digital architecture, should simply hand it over to other developing nations out of sheer altruism?
Is this an argument for international charity?
Yeah, exactly.
No, the text is highly pragmatic and explicitly avoids framing this as charity. But equally importantly, the author stresses that this is not a new form of digital neocolonialism either. The export of the digital triad is presented as a sophisticated commercial and developmental strategy.
It is a deliberate geopolitical business model.
Yes. The author details the specific tangible revenue streams India could tap into by exporting this architecture. When another nation decides to implement this stack, India generates income through licensing the foundational technology.
Providing high-level consulting fees to adapt the code to local laws.
Exactly. And charging technical assistance fees for the ongoing maintenance and security of the infrastructure.
But what is the incentive for the partner country? If an African or Latin American nation adopts this Indian technology, aren't they just trading dependence on Western financial institutions for dependence on Indian tech companies? Do they lose control of their own citizens' data?
If we connect this to the bigger picture, the author highlights a critical distinction in the architecture that prevents this exact dependency. The text emphasizes that partner countries do not buy a closed, proprietary black box where India holds the keys.
Okay, so what do they buy?
They are empowered to build their own sovereign versions of the system.
Sovereign versions, meaning the underlying code is the foundation, but the house built on top belongs entirely to the host nation.
The data remains localized. The biometric records of citizens in a partner country stay within that country's borders, governed by their own specific privacy laws.
So India doesn't own the data?
No. The local government retains total control over the land Aadhaar registry. India just provides the blueprints, the architectural expertise, and the interoperability standards. But the physical servers and the legal authority remain sovereign.
This feels like a massive geopolitical shift. If India successfully exports the sovereign stack across the global south, they effectively create a new interoperable economic bloc.
It's huge.
They bypass Western financial hegemony systems like SWIFT or traditional World Bank lending structures by providing a cheaper, faster, and more localized foundation for wealth creation.
India reaps financial returns, but they also lock in decades of international goodwill
Deeply integrated trade relationships.
and the power of setting the standard for global digital infrastructure.
The strategic implications are vast, but the author does include a vital, sobering caveat before this global ambition can actually be realized. The export strategy has a strict prerequisite.
Yes, and it's a very pragmatic one. You can't sell the blueprint to a skyscraper if the one you built in your own city is leaning over.
Right.
The text is explicit. India must urgently and rigorously complete its own domestic land digitization drive before it can legitimately market the solution abroad.
The internal land Aadhaar system must be flawless.
Exactly. The titles must be mathematically accurate, entirely dispute-free, and seamlessly tradable on the UPI rails.
The system has to survive the stress test of a billion people first.
Furthermore, the author specifically notes the requirement to protect vulnerable groups during this domestic transition. The algorithm must be designed to recognize and secure the rights of indigenous populations, marginalized communities, and those who may lack traditional documentation.
Rather than inadvertently erasing them from the new digital reality.
Yes, the logic presented is uncompromising. Domestic success is the only valid advertisement. A nation cannot export an architectural cure for systemic poverty if it has not comprehensively proven that the cure works within its own borders.
Which brings us back to the sheer breathtaking scale of the ambition we've unpacked today. We started by looking at the quiet tragedy of a 50-acre plot of dirt, land that traps a family in a cycle of poverty simply because the analog paperwork surrounding it is broken, disputed, and ignored by the formal economy.
We traced the mechanics of how resolving that single issue completely rewires human behavior.
Right. And scaling it up through a unified digital architecture of biometric ID, real-time payments, and tamper-proof land records.
It is a blueprint that fundamentally shifts the focus of development from managing the symptoms of poverty to systematically engineering the foundations of wealth.
It replaces the opaque manual bureaucracy that extracts value with a transparent digital interoperability that multiplies it.
It reminds you of the author's central paradigm-shifting thesis. The fastest, most effective route out of mass poverty isn't finding new physical resources buried in the ground.
It isn't waiting for a massive influx of foreign capital.
It is establishing formal property rights, verifying digital identity, and routing it all through frictionless digital money.
It's turning on the lights so the immense value that is already sitting there in the dark can finally be seen, leveraged, and traded.
It is the implementation of institutional technology to turn latent potential into active prosperity.
And as we wrap up this deep dive, I want to leave you with a final, lingering thought to ponder long after you start listening. We've just spent this entire time looking at how a country unlocks the dead capital hidden in its soil by simply formalizing it digitally, by giving it a secure name, an undeniable boundary, and a verifiable tag that allows it to interact with the broader world.
It's a powerful framework.
Think about the mechanics of that transformation, and then look at your own life. Look at your own skills, the projects you've half finished, the networks you've built, or the unique knowledge you hold.
What dead capital are you sitting on?
Exactly. What talents or resources do you have that feel like that 50-acre disputed plot? Massive in potential, but functionally stagnant because you haven't defined them clearly or packaged them in a way the world understands.
That's a great question.
If the secret to unlocking national wealth is simply bringing order and visibility to the chaos, how might your own value multiply if you found the right system to formalize your skills, secure your unique identity, and confidently share it with the market? The tools for your own transformation might already exist. They might just be waiting for you to verify their worth.